Hey guys, welcome back to another episode. In this video we will be going through our Heiken Ashi trading strategy in depth and how we use it in combination with price action. Heiken Ashi candlesticks are great because they smooth the price action. As a result, much of the noise shown in traditional Japanese candlesticks is eliminated with Heiken Ashi charting, and it helps make the trade entry and exit decision simpler. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Are you confused with not knowing exactly how or when to enter into a trade? With so many different candlestick patterns, traders can get paralyzed by overanalysis on whether a certain candlestick is an entry or not. And have you gotten into a trade where it was going in your favor, but you got out too early? It's frustrating to get out of a position only to see the trade go further in the direction of the trade you exited. Let's face it. As a trader, we have many things to analyze at any given time. If you take too long to decide whether it's time to enter into a trade because of your complicated entry rules, it might mean a missed opportunity for you. And if you exit your position too early, then it could affect your profitability in the long run. But what if you had a simple way of knowing exactly when to get in and out of your trade without any complicated analysis? Then you want to consider using the Heiken Ashi bars to time your entries and exits. In this video, I will share with you a simple Heiken Ashi strategy to simplify your entries and exits, so you will know exactly when it's time to enter or exit a trade. And now, what is the Heiken Ashi technique? The Heiken Ashi technique is a Japanese candlestick-based technical trading tool that uses candlestick charts to represent and visualize market price data. It is used to identify market trend signals and forecast price movements. The Heiken Ashi method uses average price data that helps to filter out market noise. The absence of market noise results in a clear illustration of market trends and direction, which helps determine potential price movements. The trading technique assists traders in identifying when they should hold on to a trade, pause a trade, or identify if a reversal is about to occur. The Heiken Ashi trading technique was developed by Munehisa Hama in the 1700s. The technique shares some characteristics with the traditional candlestick charts used in trading, but differs in how the values for candlesticks are computed. In Japan, the word Heiken means average or balance, and the word Ashi means bar or foot. Hence, Heiken Ashi means average bar, resonating with the trading technique, which uses the average price of the security. The difference between Heiken Ashi and traditional candlesticks. The main difference between the traditional candlestick chart and the Heiken Ashi chart is that the latter uses a modified formula based on 2-period moving averages instead of open, high, low, and close prices. Hence, the technique generates a smoother chart, making it easier to spot trends and reversals. The Heiken Ashi charts also obscure gaps and some price data. The left chart is using traditional candlestick bars, and the right chart, it's using Heiken Ashi bars. You can see that with the Heiken Ashi bars, it's much more smoother. This is why some traders prefer to use the Heiken Ashi candles, since it reduces the noise on the chart and allows them to analyze trends more clearly. What makes Heiken Ashi different from a traditional Japanese candlestick chart is how the price is displayed in terms of the open and the close. If you look closely at the Heiken Ashi chart, you'll notice that each of the Heiken Ashi candlesticks start from the middle of the candlestick before it, and not from the level where the previous candlestick had closed. Heiken Ashi candlesticks act this way due to the way they are calculated. If you're interested, here's the calculation. Heiken Ashi close equals average of open, high, low, and close. Heiken Ashi open equals midpoint of previous Heiken Ashi bar. Heiken Ashi high equals highest of high, close, and open. Heiken Ashi low equals lowest of low, close, and open. By the way, please don't bother to memorize this formula. And don't even think about trying to understand why it's calculated this way. It will not help you be more profitable or help you become profitable at all. Just understand that it's meant to help you identify trends better in the market. Also, don't mistake the Heiken Ashi bars as a trading system because it's not. If you go long whenever you see a bullish bar or go short whenever you see a bearish bar, then you will go broke very quickly. Like the candlestick bars, it's just giving you information on the market. Heiken Ashi price action patterns. With candlestick bars, you have many different types of price action patterns. You have the doji, gravestone doji, and the dragonfly doji. You have the pin bars. You have the engulfing candlesticks. And the list goes on and on. There are literally tons and tons of candlestick patterns. But with the Heiken Ashi bars, I've categorized them to just 3 main types of price action patterns. First, bullish bars. With the bullish Heiken Ashi bars, you will notice that there's only a wick at the top of the bar, but there's no wick at the bottom. As long as this is an up bar with no wick at the bottom, we consider this a bullish signal. Second, bearish Heiken Ashi bars. The bearish Heiken Ashi bars are simply the opposite of bullish Heiken Ashi bars. They have a wick at the bottom, but not wick at the top. As long as this is a down bar with no wick at the top, we will consider this a bearish signal. Third, indecision Heiken Ashi bars. To simplify the Heiken Ashi bars, I've categorized all bars that have wicks at the top and bottom of the bars as an indecision Heiken Ashi bar. So regardless of whether the bar color is bullish or bearish, as long as there are wicks on both sides, we will consider this an indecision Heiken Ashi bar. Why use Heiken Ashi bars? Now that you know what are Heiken Ashi bars and you know the 3 different types of Heiken Ashi price action patterns, the question you might be asking right now is, why use the Heiken Ashi bars for our trading? And the answer is because it helps make the trade entry and exit decision simpler. And now, how to enter into a trade using Heiken Ashi bars? While it might be tempting to go long whenever you see a bullish Heiken Ashi bar, or go short whenever you see a bearish Heiken Ashi bar, please resist your urge to do so. I know there are people out there teaching to do this, but I know you're smarter than that, so don't do it. To have an edge trading the markets, you need to have certain criteria to be met before entering into a trade. Buying rules or long position. Criteria number 1. The higher time frame must be in an uptrend. What this means is that the high time frame has to be making higher highs and higher lows. If you're trading the 1-hour chart, then the higher time frame would be the 4-hour chart, and if you're trading the 4-hour chart, then the higher time frame would be the daily chart. I don't like to trade any time frame lower than the 1-hour chart because not only is it tiring to watch, but the commissions and spread will eat away a significant amount of your edge at lower time frames. But that is not to say that it's not profitable trading lower time frames. It's just more difficult because your spread and commission would be a bigger percentage of your trade parameters than in the higher time frames. Criteria number 2. The 10 exponential moving average is above the 30 exponential moving average. I use the 10 EMA and 30 EMA to determine the momentum of the trend. Criteria number 3. The time frame you're trading on must have both criteria 1 and 2 as well. Once there are these 3 criteria in place, I will look to go long when the price bounces off either of the exponential moving averages, and the first bullish Heiken Ashi is formed at a higher low like this. Then place stop loss below the low of the current swing low. Criteria for a short trade. Now that we know the criteria for a long trade, the criteria to get into a short trade is just simply the opposite. Criteria number 1. The higher time frame must be in a downtrend. This is denoted by price forming lower highs and lower lows. Criteria number 2. The 10 exponential moving average is below the 30 exponential moving average. This is straightforward, and you should have no difficulties identifying this on your chart by now. Criteria number 3. The time frame you're trading on must have both criteria 1 and 2 as well. Once you have all 3 criteria, I will look to go short when price bounces off either of the exponential moving averages, and the first bearish Heiken Ashi is formed of a lower high. How to exit a trade using Heiken Ashi bars. As for exit, because this is a trend trading play, we want to exit only once the price has formed an opposite Heiken Ashi bar. So for long trades, we only want to exit when a bearish Heiken Ashi bar is formed. And for short trades, we only want to exit when a bullish Heiken Ashi bar is formed. As you can tell, it becomes so much simpler to determine when to exit. Now, sometimes if you are in the long trade, you will get faked out of your position because a bearish Heiken Ashi bar formed, only to see the next bar become a bullish Heiken Ashi bar, or vice versa if you're in a short trade. But that's fine. There's no way you're going to catch every single bit of every trend there is. Ultimately, if you are profitable from your trades as a whole over a series of trades, then that's all that matters. Trading examples. Alright, enough theory. Here's a trade example to show you exactly how to enter and exit into a short trade. In this chart, you can see that the market formed a lower high and bounced off the 30 exponential moving average. Once you see that happen, the next step is to wait for a bearish Heiken Ashi bar to form. When it's formed, go short at the close of the bar. From there, the market dropped pretty quickly, and indecision Heiken Ashi bars started to form. This is not a good reason to get out, because it could just be consolidating before the price goes down again. However, in this case, the price did not go down further. Instead, a bullish Heiken Ashi bar was formed, and that means to get out of the trade at the close of the bar. Here's a trade example of how to get into a long trade. In this chart, you can see on the left-hand side that the price has spiked up pretty quickly and then started consolidating. Consolidation in an uptrend is a good sign because this could mean that price can go up further. And the market did bounce off the 10 exponential moving average and formed the first bullish Heiken Ashi bar. Go long at the close of the bar. Price did go up further before an indecision Heiken Ashi bar is formed. Immediately after the first indecision Heiken Ashi bar is formed, the next bar after that is a bearish Heiken Ashi bar. That's the signal to exit out of the trade. And fortunately for us, price did eventually go much lower after we exited the trade. However, not all trades are going to be like this. As I've said this a number of times already, it doesn't matter if you do not catch the whole movement of the trend. It's impossible to do so. What you can only do is take whatever you can based on your trading system, and in the long run that will lead you to profitability. Here are other examples of Heiken Ashi trading strategy.
With a cosmic glow, streaming eyes won't let it go. Vibrations break through the cyber cloud. The rhythm's loud as they call the crowd. fire burns untamed. Every flicker whispers our name. Vibrations break through.
Heiken Ashi bars are great because they smooth the price action. As a result, much of the noise shown in traditional Japanese candlesticks is eliminated with Heiken Ashi charting, and it helps make the trade entry and exit decision simpler. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and leave us a like to show your support. See you next time.